Patterson, and I'm Deputy Money Editor at USA Today. And I'm here with Sharice Jones, who is a personal finance and business travel reporter here at USA Today. And it was a crazy day today on Wall Street. The market went nuts. At the lowest, the Dow was down 565 points, but we ended down only 249 points.
Right, yeah, that shows the volatility of the market and why it's so important to, not panic and start moving your money around really quickly, because in that space of time, the market got a little bit better. It still didn't end on an upward note, but it came back hundreds of points. So that's something to keep in mind when you're looking at your portfolio.
Everyone keeps asking me, what do I do with my money? Should I put it under my mattress? Should I just get, and more seriously, should I get out of stocks? Should I go into bonds? What the people that you're talking to, what are they advising folks to do? You
don't want to get entirely out of stocks, because if you want to get the most bang for your buck, you need to be in the market. But the closer you are to retiring, you might want to get into some slightly safer investment vehicles. So maybe more in bonds than you are in stocks or equities. I think it's really important to be diversified. And this is a reminder of that, right? You don't want to have all your money in energy stocks right now. So it's good to be in technology and in healthcare and in different sectors and different types of funds, right? Growth, aggressive, more stable. So don't rebalance tomorrow, because the market is still a little weird and a little jangly. But maybe in the next few days, if it settles down a little bit, you might want to look at rebalancing to make sure that you're not overinvested in one type of stock or one sector.
I want to go back to something that you said a few minutes ago about energy stocks, because as we know, oil prices going down today and also being volatile was a big reason for the drop.
Right.
And there's some folks saying that oil is going to continue to go lower. There's a glut of oil out there.
You've got the new deal with Iran, which is going to bring even more oil into the market. Yeah.
Exactly. So we're probably going to see even more volatility related to these issues. But you actually wrote a story recently where you talked about other types of products other than gasoline, where a lot of people are getting some relief, where companies might get a little bit of more cash in their coffers because they're paying less for oil or things that are made out of oil. Can you tell us a little bit about that?
Yeah, there could be an opportunity to invest in stocks that are now going for a little bit cheaper than they were before. Whether that's energy stocks or technology. A lot of products are made out of oil. Everything from cosmetics to laundry detergent to clothing, and so it might be a good idea to look at some retail stocks. They might be a little bit cheaper, but their costs have gone down, and that could benefit the consumer as well. So this could really be an opportunity. It's not all bad news.
But when I go buy more lipstick, am I going to save some money? Seriously.
Well, the costs may not be the savings may not be passed on that quickly to consumers. Companies want to make money. That's the bottom line. The bottom line is the bottom line for industries. But at some point, you might see some products come down. It's something you've got to watch. If you buy lipstick normally, you'll notice if the lipstick's a little bit cheaper. So that could benefit you, but you have to know that when you go to the countertop at the store.
This is USA Today's Ann Godlaski speaking from behind the camera. We've had a few people ask about specific things. A couple people ask about Apple, also Nike, Fannie Mae, and Freddie Mac.
I can't give specific advice about certain companies. I know that Apple shares have been down, and so again, when stocks drop, that can be an opportunity, because if they come back, you can make a lot more money. That's a real personal decision, but if you use the product, if it's a company that you know and you follow, looking at investing in them is not a bad idea.
Generally, when you're looking at investments, you have to look at not just what the markets are doing, but the fundamentals of the company. What's going on? What does their future look like? What does the sales channel look like? What are their competitors doing? Is it a good industry to be in general? And you also have to weigh that with, as Sharice said earlier, your time horizon. Do you have 20 more years in the market? Do you have 10 more years in the market? Do you have 50 more years in the market? So you have to look at all of those things. You can't just weigh what you're doing on one day or 2 weeks of activity.
Okay, and again, this is Philana Patterson and Sharice Jones. They are our money editor and reporter here. We have a couple more questions from the field. First of all, some people are saying everybody should run for the hills. What's your reaction to that?
No, you shouldn't run for the hills. I understand people being nervous. I mean, this is our portfolio, what we're dependent upon to retire, to fund our kids' college tuition. I mean, there's reason to be a little bit nervous, but the market has been going up and down for decades. It comes back, it rebounds. There are a lot of variables that go into play, so you don't want to do anything hasty. So just take a little time to breathe, watch it for a few days, and again, just make sure that you're balanced in a way that works with your time horizon for when you want to retire and for some of your other financial priorities.
And actually, a lot of people say, and there's been some research on this, that people who market time actually do more harm than good to themselves. Now, there are some professional investors out there who know how to beat the market or know often how to beat the market, but for the average investor, and if you have a long time to invest, staying in the market tends to be what has worked. And there are a lot of experts who say that that's what to do. But you have to do a gut check for yourself. What can make you sleep well at night? And you might need to change your allocations and do that rebalancing that Sharice was talking about if you feel like you might be a little bit too overexposed to stocks.
Do you think we can expect as volatile a day tomorrow as we had today?
I think it's possible.
I wish I had that crystal ball.
Yeah, you never know. We'll find out tomorrow morning.
So thank you again for checking us out. And I'm Philana Patterson, Deputy Money Editor at USA Today.
And I'm Sharice Jones, Personal Finance Correspondent with USA Today.